Hello everyone, my name is Ram Dhamija. Welcome to my channel. Today is 22nd of July and it's a Tuesday. It's a Sensex expiry day. The markets are calm. There's not much movement. Nifty is slightly under pressure but not much. And Sensex has also been within a range. Though there has been some peculiar thing that has happened in the last 3-4 days, the market movements have picked up. I don't know whether it's a coincidence or is it got something to do with the Jane Street coming back, but the spikes in the market have resumed for the last 3-4 days, which was absent for the last 10 odd days. It was absent 10 trading days. So that is one peculiar thing that has happened. But otherwise, markets one day are down, one day are up. It looks like they are working in a range, and they want to break out of this particular range. I don't foresee a breakdown as we speak. I've been maintaining that for a long time. That this market is itching to go up unless we break certain critical points like 24,500 odd. If that happens, then yes, we can say that the market is going to go down. But till that time, this happens. We are in this range of 24,500 to 25,600 odd, and it's, in my opinion, a matter of time, before we start breaking out of this particular range, because the buying that emerges as the market reaches 25,000 levels or even 24,900 levels the other day is quite strong. So it looks like the market is itching to go up. So today was Sensex expiry. It was relatively a calm expiry except for the initial movement downwards, which happened in the first few minutes of open. But apart from that, I think it has just been in a range. Same thing happened yesterday. The markets went down, then they went up, and then they were in a range. So these sharp spikes come in, they take away your stop losses of call and put both sides, or at least they try to, and then it's in a range. So it's very, very typical behavior of the markets right now. So let's straight dive in. What exactly are the markets entailing and how the markets are looking like? So this is the Nifty chart, as you see. Nifty daily chart, it's pretty much the same as we had discussed. We are in this particular range of these two bands that you can see, which is 25,600 and 24,500, and these two blue lines that you see, this first blue line of course is the all-time high of 26,200, but this blue line is where the last consolidation actually happened, and you can see that even this time we managed to just go till there, and from there we have taken some sort of a support. And you can see this particular leg of consolidation is going on since 30th of June. So it's been a good 22 days since we have been consolidating in this range. And the previous consolidation, as you can see, was month and a half consolidation from 12th of May, and it lasted right up till 20th of June. So these consolidation phases are there, and then the market moves up into the next level, and then the consolidation will happen over here, and then perhaps it will go towards 26,200. I mean, that is one hypothesis that that exists. The other hypothesis, of course, is that we break down, but as of now, there are no signs of it. Next, let's look at the Bank Nifty charts. The Bank Nifty charts are much more stronger and better. So Bank Nifty is already going towards the upper end of its range, which is 57,750, and the bottom range was 56,170. So it took support over there. Why the support? So you see the previous high that was made on 23rd of April, from where we retraced back, and then this particular gap up was 6th of June. And then the next gap up of 24th of June. So all were in the same range of 56,000. This time also we bounced back from 56,000, and we are now going up towards the upper end of the range, which is 57,600. Once we break that, it's going to be another all-time high, and the banking results have been good, and we have seen that the stocks have moved quite rapidly after the results. Let us look at the open interest. Now open interest is slightly bearish, and I've been maintaining this for some days, that open interest is not turning bullish at all, and maybe that is one reason why the markets are also stuck in a particular range. As you can see over here, there are about 17 crore calls in the system, 17.5 crores versus 12 crore puts. So there's a difference of about 5.5 crore additional calls that have been written. and the PCR is 0.69. It's much better than 0.59, which existed a couple of days back, but still it is less. One very interesting thing that happened the other day was that the PCR was 0.59. I think it was yesterday, if I'm not wrong, and the market immediately tanked. And that PCR got covered to 0.8. Once the PCR got covered, the markets actually started moving up yesterday. So, PCR plays a very, very important role in determining the short-term direction of the market. So as we speak right now, 25,100, there are a lot of calls, 25,150, 25,200, a lot of calls which are put in. So until this reverses, I don't think that the expiry can break 25,200 in the next 2 days. Now let us look at, this is the Sensex chart, Straddle chart. It was a peaceful decay. There's nothing much to add over there, but let's look at the Nifty Straddle chart. We are at 137, so that's very, very less premium for 2 days. That basically means we are going to open at somewhere around 80 on expiry day, assuming that tomorrow we'll have some decay, and then overnight decay is there. So this is very less premium. 137 points is nothing. So the market is not in a mood to go more than 70 points on each side. That's why the premium is about 137. So in my opinion, this is very less for the kind of volatility that we are seeing, and hence Nifty stop losses are easily getting taken out for the last 2-3 days, because the premiums are very, very less. Also the volatility is gone down, and the IVs are at rock bottom. So all this will course correct. There will be some event and then it goes up. This has been the nature of the markets, but as of now, this is what it is. Now let us look at how the indices are performing from their all-time high. Fin Nifty, Bank Nifty are already at their all-time high, just about 1% down. Mid cap is now minus 2.5, and Nifty is recovered a bit. It had gone to minus 4.9, now it's minus 4.5 now. Apart from that, Nifty next is the weak one. Still, it's at minus 12.34. Pharma is at minus 6.6. Metals are doing well at minus 7.54. They have recovered somewhat in the last few days. IT is now minus 20. So IT is still in very, very big trouble. Apart from that, Momentum and Alpha are also down, and FMCG is also down minus 15%. So that is the sectors from their all-time high. This is what the today's performance looks like. So today was a dull day and all the sectors are down. VIX is also down, which is strange. So Nifty is going down. I wouldn't say it's going down. It's actually within the range, and VIX is also going down further. So 10.8 is the VIX, which is very, very low. Apart from that, media lost out, pharma lost out 1%, autos lost out, mid cap lost out. So basically everything was in the red except for financial services, which is up, which is flat actually as we speak. So Nifty 50 is minus 0.13, and rest everything is below that. So you can see, sometimes peculiarly these things also happen, wherein the index has fallen the least and all the other sectors have fallen more than that except for financial services. Let us look at now what the performance has been for the last 1 month of these particular sectors. So VIX, as you can see, is down minus 23%. IT is the one that is the only sector in the last 1 month which has gone down by minus 4%. And if you look at the best performing ones, small cap has done very well at 4.5, MNCs 4, metals 3. So metals are making somewhat of a comeback. FMCG has made a good comeback after the drubbing we have seen over the last 6-8 months. Pharma is up 3%, auto is up 1%, and so on. So and Nifty has basically been flat at 0.36%. So that's the last 1 month performance of the indices. Now let us look at what the international cues are suggesting. So US 10 years is at 4.96. It is where it was when we spoke last on Sunday. S&P VIX is at 16.97. It is absolutely fine. So US markets are doing well. They are creating new all-time highs every day. Bitcoin is at 118. It's nearing a new high again. 124 was the previous high. Dollar index is at 97, which is fine. Brent oil is at 68. It's cooled down a bit. It had gone to 69. And the thing to see over here is gold and silver back again to their all-time highs. Silver all-time high is 50, but recent highs is was 38. It's broken that. And the gold recent high was 3,400. It's now 33.85. So these two, along with Bitcoin, is basically indicating that dollar is losing its value a lot. So if you look at, this is the gold spot rate, and how it has performed over the last 1 year. So it made a peak over here. This was somewhere in June, 8th of June. It made a peak of 3450 odd, right? And it is pretty much there. So it briefly fell down, but it's pretty much there. So gold, silver, etc. are also an indicator. They are pegged against the dollar, right? So they're measured in dollars. So if dollar goes down, they are bound to go up. And same thing is happening in silver. Look at the fantastic, silver has been the best performing asset this year. And look at the performance of silver in last 1 year also. It last year back, silver was trading in at about 28. Now it is at almost close to 40. So you can see the huge outperformance of silver that has started to happen. Gold and silver both have done really well, but silver in the last 2-3 months, especially since April, has done much better than gold as well. So it's playing that catch-up trade, and basically it is indicating how the markets are viewing the US dollars and how they are viewing inflation. Not inflation really, because inflation is low still in US, but how they are basically valuing the currency, the US dollar, which is continuously going down against the other basket of currencies. And this also shows somewhere how money is losing its intrinsic value, and that is where you see asset prices going up, be it the stock market, be it gold, silver, Bitcoin, anything that is asset related, tends to go up in a loose monetary policy kind of a situation, which is happening with the US dollar. So what should be the best course of action during such times is that, A, you need to have your investments right. You need to be invested in assets, be it any asset, be it stock markets are of course the best, because they have the highest growth rate, but you have to be invested in assets. You can't be invested in just in fixed income. Second is, you have to get your asset allocation right. There has to be a component which you have to invest in gold, silver, precious metals, because when equity markets tend to go down, then these assets tend to do well. Being in cash, being in just FD, savings account, etc., will not help you much, because you will lose out to inflation. And inflation, though in India the number that has come, CPI inflation, is pretty low, but if you look at your segmental inflation, the lifestyle inflation, that those numbers are very, very high, because the kind of lifestyle that we lead and the kind of aspirations that we have, and especially in big cities, metros, etc., the inflation numbers are quite mind-boggling. So if you're not invested properly, you will tend to lose out on. And silently, what is happening is the US dollar is also going down, and our currency is kind of kept pace with that. So our currency doesn't appreciate much against the US dollar, even though the dollar index has gone down from 110 to 97. So basket of other currencies have appreciated, our currency is not. So somewhere, being invested in assets is very, very important, and being invested in equities, which is the best asset class in my opinion, because I might be biased, I'm from this sector only, but historical data also shows that if you are invested in equities, then that tends to perform the best. How to be invested in equities is, of course, for a retail investor, mutual funds is the best. And I am a mutual fund distributor as well, so another vested interest over there. But in case anyone is interested in knowing more about mutual funds, they can fill up the form, a Google form, and get in touch with me. I'll be happy to help them evaluate your portfolio and take it from there. So coming back to the markets are looking fine. They are within that range, and some volatility here and there is happening. The VIX is still continuing to go down. Liquidity is ample in the system. Only a couple of worries. FIIs have started to sell, so that is there, but that's not a major concern as of now. The results are trickling in. Some are good, some are okay, some are not so good. So the market is reacting accordingly to that. But it looks like as of now all things are under control, until there is some unknown that we don't know about. So peaceful expiry for Sensex. Now all eyes on Nifty expiry on Thursday, and let's see how the markets behave till then. So that's it from me for today. Hope you liked the video. If you did, please subscribe to the channel, and please share it with your friends, family, and on WhatsApp groups. And I shall see you soon with another update. Take care. Bye bye.